This jobs report was actually pretty substantially better than you were anticipating. At Pimco, you were looking for 120 for the headline number. You were also looking for the unemployment rate to remain unchanged. So you could say it is better, but does that indicate anything to you about the strength of the economy?
Yeah, well, we were actually looking for 120 on private payrolls, and private payrolls came under that, I think, at 115. So our headline forecast was 135, which was very close to what we got, but we were expecting a little bit more census hiring with the government, which we didn't get. But I think overall, what this payroll report tells us, it wasn't as bad as it could have been, I think, given some of the more negative signals that we got from the purchasing manager indices earlier this week. But at the same time, it is consistent with some slowing. So private payroll growth, for example, is currently running around 110,000 jobs per month on a 6-month basis. And that's down pretty significantly from the 200,000 jobs that we were seeing last year. So overall, we think the economy is slowing. These reports are indicative of that. I think one thing that we're very focused on is aggregate hours, because when you think about the building blocks of economic activity, it's really how much you and I work and how productive we are at work. So if we start to see aggregate hours, decelerate or actually start to fall, that's usually bad news for the economy. And the production and non-supervisory aggregate hours number was actually still weak on a 6-month annualized basis. It was flat in this report. Service sector, more importantly, service sector hourly aggregate hours was actually a little bit negative. And you don't tend to see that outside of more severe downturns. So I would say that, we're seeing a little bit more evidence that there's weakness starting that's starting to move outside of just the manufacturing sector, and that's something
Yes.
that we're very focused on.
Tiffany, wages 2.9, that looks like a bad number as well. If you have unemployment as low as it is right now, you would expect, the textbooks would tell you, that wages would go up. Why aren't they?
Well, I think there's a couple of reasons. I think the first is that, we've seen a secular decline in productivity growth. So although we should be seeing some cyclical acceleration in wage growth, nominal wage growth, which we have seen, that cyclical acceleration is just not going to be as pronounced this cycle as it was, in past cycles. So the kind of 3% growth that we're seeing in average hourly earnings now is adjusted for, those secular declines in productivity it would have been equivalent to about 4%. Or maybe even a little bit higher in the previous cycles. But so overall, I think as the economy slows, it makes sense that corporations are going to cut back on their labor expenses, and that means slower wages, fewer hours, and less hiring.
Was the market reacting to the fact that this jobs report wasn't all bad, Tiffany, or was it reacting to the fact that it was showing weakness and therefore the prospect of another Fed cut is much more definite?
Well, I think the unemployment rate, which you talked about, which ticked lower, the household survey was a little bit better in terms of the job gains at, I think, about 400K. But keep in mind, that survey can be noisy. And one thing that we're also focused on is that, the participation rate has been steadily increasing over the last 6 months. And that flattened out today. And what could happen is that as the economy slows, you have fewer people that are excited to work and coming back into the labor market. So that's obviously not a good thing, but it could result just mathematically in the unemployment rate ticking a little bit lower before it ticks higher. Now on your point about markets, I think certainly the market has priced in a higher probability of the Fed cutting interest rates in October. We agree with the market. We think they will cut, and that's because of broader indications of slowing growth.